G'day folks, welcome back to Pete's Investing. It's October 24, 2023. This is the US dollar DXY update. Got the weekly, daily and hourly. As you can see, overall we're trending predominantly bearish on the daily and hourly and somewhat bullish to sideways on the weekly. So if we drill down to each of these, you can see here the CCI 150 is broken into an upward bullish movement, although it's starting to turn down again with that slight retrace. And you can see here of that larger Fibonacci range, we've bounced off that 61% level back in July and made an advancement. And that advancement goes as far as, let's draw Fibonacci on that range, and it's bounced off the 50% level of Fibonacci, and it's bouncing down from there. Now that could be just a minor retrace before heading further to the upside, but we'll keep an eye on that and let you know as it goes. On the daily, predominantly, you can see there we're still in an uptrend on our CCI 400, our trend indicator, and it's broken down on our CCI 150, which is our divergence indicator. Now, we did have a bearish divergence there on the CCI versus the price. It broke down, and you can see there it's probably just touched, what's that low? The low on that one is 10,507, and that would have been a Fibonacci range. I can't just let me redraw that. Yep, between a 23 and a 38%. So we said that's hit at 38. That's at the 10,507, and the 23% was 10,512. So it's actually hit our target. So I'll mark that as a hit on the daily. So another divergence has been executed and delivered results so far, and that could still have some further downside. So you can see there on the, go back to the daily, on our trend indicator, it's touching the moving averages, and it may bounce off that possibly, but if it breaks below that, then we're going to get more bearish on the US dollar. Now on the hourly, you can see there at our last video it did bounce off the 61% level, and that's always a key area to look out for. It bounced back up to that, almost to that high there, and then it breaks very dramatically down and gone beyond the 100% retrace of that Fibonacci range. And remember I said if it breaks below the 61%, that's always a key area to look out for. Look how it collapsed below that 61%. Before the 61%, it was sort of hovering and trying to decide what to do, but once it broke below that, it broke pretty suddenly and pretty dramatically. Now there's a minor bullish divergence on our divergence CCI here. Although they're both trending downwards, there is a bullish divergence here versus the price. So we may see a retrace. I'll draw a target for now, but I wouldn't be entering it yet. Again, if you're going short, this is probably an area to get out of the trade. So if you're making some profit on going short at this point, this is a good indicator to get out of with profits. I'll use that divergence primarily to exit trades. The CCI 400 is still in a pretty strong downtrend and possibly starting to make a bit of a retrace in line with the price. But if it was to break up, the minimum target area would be that 23 to 38% level. So let's just draw that target in that range. So if it does bounce from there, we expect it to hit at least that level possibly before going even higher possibly. But again, these divergences don't necessarily mean a full term reversal. It could just mean a little retrace, and I use these primarily to get out of trades. As I said, if this is going short, I'd be getting out of the trade with some profits whenever I see these divergences. So at the moment, if I just summarize, the weekly's still long but breaking down, as you can see on the CCI. The daily is going sideways on our trend indicator and broken down already on the divergence indicator, and both short on the hourly chart with a small divergence, a bullish divergence on the hour chart. So hopefully you got some value out of the video. Hit that like and subscribe button, hit that notification bell. Thanks for watching, and see you in the next video.